Dear learners, in this video lesson, I am going to solve this problem. This problem comes under diminishing balance method of depreciation. If you are looking at this problem, that means question, on 1/1/2011, machinery was purchased for rupees 80,000. On 1/7/2012, additions were made to the amount of rupees 40,000. On 31st/3/2013, machinery purchased on 1/7/2012 costing rupees 12,000 was sold for rupees 11,000, and on 30/6/2013, machinery purchased on 1/1/2011 costing rupees 32,000 was sold for rupees 26,700. On 1/10/2013, additions were made to the amount of rupees 20,000. Depreciation was provided at 10% per annum on diminishing balance method. Show the machinery accounts for 3 years from 2011 to 13. Year ended 31st December. So here we have 3 purchases and 2 sales. Here on 1/7/2012, additions were made to the amount of rupees 40,000, but on 30/3/2013, machinery purchased on 1/7/2012 costing rupees 12,000 was sold for rupees 11,000. So on 1/7/2012, they have purchased machinery for rupees 40,000. So it consists of 2 machineries. We can assume that 40,000 consists of 2 machineries. So the value of one machinery is 12,000 and value of another one machinery is rupees 28,000. Okay, so we will go to the solution. First, 1/1/2011. Okay, so on 1/1/2011, they have purchased machinery for rupees 80,000. Then and on 30/6/2013, machinery purchased on 1/1/2011 costing rupees 32,000 was sold for rupees 26,700. So on 1/1/2011, they purchased machineries for rupees 80,000. From that 80,000, the value of one machinery is rupees 32,000. That machinery sold for rupees 26,700 on 30/6/2013. So 80,000 consists of 2 machineries. The value of first machinery is 32,000 and value of another one machinery is rupees 48,000. So here machinery 1, then here machinery 2, on 1/1/2011 they have purchased machinery for rupees 80,000. The value of first machinery is rupees 32,000 and value of another one machinery is rupees 48,000. Okay, right. Then up to 1/7/2012 there were no transactions. So 31st/12/2011 we need to provide the depreciation for 1 year. Okay, so equal to 32,000 into 10 divided by 100. Then book value. Equal to 32,000 minus 3,200. Okay, so here depreciation we have calculated for the first year. So at the beginning of the second year, the book value of machinery 1 is rupees 28,800, and another one machinery 2 is 43,200. Then on 1/7/2012, additions were made to the amount of rupees 40,000. So we can enter the date here, 1/7/2012. There is no transaction for machinery 1 and 2. Okay, then machinery 3. Machinery 3. Here machinery 4. See, 33/2013, machinery purchased on 1/7/2012 costing rupees 12,000 was sold for rupees 11,000. So on 1/7/2012 they have purchased machinery for rupees 40,000. So it has two machineries. The value of first machinery is rupees 12,000 and remaining amount will goes to the second machinery. So we can divide the total 40,000 into two parts. First one is 12,000 and another one is 28,000. So it purchased on 1/7/2012. Then up to 31st 12/2012 there were no transactions. So on 31st 12/2012 we need to provide the depreciation. Okay, we need to provide the depreciation. For machinery 1 we have to calculate depreciation on 28,800. So equal to 28,800 into 10 divided by 100. Likewise we can calculate the depreciation for second machinery. Then for the third machinery we have to calculate depreciation for only 6 months, because we have purchased third and fourth machinery. That means we have purchased machinery for rupees 40,000 on 1/7/2012. So we have to calculate depreciation for 12,000 and 28,000 for only 6 months. So 12,000 into 10 divided by 100 into 6 divided by 12, or 1 divided by 2. In the same way we can calculate depreciation for fourth one. Then we have to calculate the book value of machinery 1, 2 and 3. So equal to 28,800 minus current year's depreciation is rupees 2,880. For this one 43,200 minus 4,320. For this one 12,000 equal to 12,000 minus 600. For this one 28,000 minus 1,400. So we get book value of machinery 1, 2, 3 and 4. Then after 31st 12/2012 we have transaction on 33/2013. Okay, on 30/3/2013. On this day, they have sold machinery 3 for rupees 11,000. Okay, so we have to, first of all, we have to provide the depreciation. We have to calculate the depreciation for third machinery. You no need to calculate depreciation for machinery 1 and 2, because now they are going to sell the third machinery only. So equal to 11,400 into 10 divided by 100 into, we need to calculate depreciation for only 3 months, because they sold that machinery, third part of the machinery, for rupees 11,000. Okay, so we have to calculate depreciation for only 3 months. 3 divided by 12. Just click on enter. So now we get depreciation for third machinery for 3 months on 30/3/2013. Then we have to calculate book value for third machinery, equal to 11,400 minus 285. So we get 11,115. This is book value of machinery sold on 30/3/2013. So sales. So it's sold for rupees 11,000. It's sold for rupees 11,000. So selling price is more than is less than the book value. So book value is 11,115. Then selling price of the machinery is rupees 11,000. So we get loss on sale of third machine is rupees 115. Then we have to check whether we have any other transaction during this year 2013. Yes, we have another one transaction on 30/6/2013. Okay, so on 30/6/2013, machinery purchased on 1/1/2011 costing rupees 32,000 was sold for rupees 26,700. Okay, so the date of sales is 30/6/2013. So come to the workings. Here that machinery sold on 30/6/2013. So we have to calculate depreciation for first part of the first machinery. Okay, so depreciation. So how much is depreciation? So we have to calculate depreciation on the book value at the beginning of that year. So book value at the beginning of that year is of 2013 is rupees 25,920 into 10 divided by 100 into 10 divided by 100 into 6 divided by 12, because we have to calculate depreciation for only 6 months. So we get depreciation of rupees 1,296. Okay, so here we need to calculate book value of machinery 2 equal to 25,920 minus 1,296 into. So now we get a book value of rupees 24,624. Okay, then sales value. So sales value is rupees 26,700. Okay, see, 26,700, 26,700. So here selling price is more than the book value of machinery 1. Okay, it's not 2. Machinery 1 is more than the book value. Selling price is more than the book value, so we have earned through this sales. So 26,009 and 700 minus 24,624. So we get 2,076. 2,076. This is profit on sale of machinery 1. Then go to the question. On 1/10/2013, additions were made to the amount of rupees 20,000. Okay, on 1/10/2013, additions were made for rupees 20,000. So 1/10/2013 purchase. So on this date, machinery 5 purchased. Okay, machinery 5 purchased for rupees 20,000. Rupees 20,000. Next to that, we need to calculate depreciation for the machineries other than machineries which were sold. Okay, so on 31st 12 2013, depreciation we no need to calculate depreciation for this first machinery and third machinery, because we have earned profit on the sale of first machinery and we incurred loss on purchase of we incurred loss on sale of third machinery. Okay, this is loss. So we have to calculate depreciation for this machinery and for fourth machinery and fifth machinery. Okay, so first we can calculate depreciation for the second machinery. So we have to calculate depreciation for the second machinery for for whole year. Okay, equal to into 10 divided by 100 into, that's all, 10%. Then here we no need to calculate depreciation because this machinery was sold. Then we need to calculate depreciation for this machinery. Okay, that machinery purchased on 1/7/2013. So depreciation is equal to 26,600 into 10 divided by 100. Then we need to calculate depreciation on this last machinery. So depreciation is equal to 20,000 into 10 divided by 100 into this machinery purchased on 1/10/2013. So 10, 11, 12. So this machinery was sold for only 3 months. So we have to restrict the depreciation only for 3 months. So 3 divided by 12. So we get depreciation of rupees 500. Okay. So this is basis for preparation of this machinery account. So on the basis of these workings, we can prepare the machinery account. So 1/1/2011 they purchased machinery. So to bank account, to bank they purchased machinery on 1/1/2011 for 80,000. So we can enter the entire amount, entire 80,000 here. Okay. Then here 31st/12/2011 by depreciation. So we can calculate the total depreciation. Here we can make the total equal to plus plus. So 80,000 we get. So here we have depreciation equal to 3,200 plus 4,800. So total it comes rupees 8,000. So 8,000. Then by balance CD. Okay, carry on. So here we have book value of rupees 28,800 and 43,200. If you are adding to these values together, you will get the total book value of the machinery 1 and 2. Okay, that is by balance carry down. Amount required for by balance carry down. So 28,800 plus 43,200. Okay, we get 72,000. So 72,000. Then total is rupees 80,000. Here also 80,000. Then come to the next year 1/1/2012 to balance BD rupees 72,000, right? So next to that we have another one purchase, okay, on 1/7/2012 equal to this one plus this one 40,000. So if it is purchase, we have to enter the transaction under the debit side. So 1/7/2012 to bank account. How much? We purchased machineries for rupees 40,000. So I am entering 40,000 here. Then after that we don't have any transaction in between this second year. Okay, so straight away we can go to the 31st/12/2012. So on this date total depreciation will be second one plus third one plus fourth one. So 9,200. So where to enter this amount? Here we can enter 31st/12/2012 by depreciation. Okay, we have calculated total depreciation here. There is 9,200. So I am entering that 9,200 here. Next to that we need to calculate the total book value. So we have book value of first machinery, book value of second machinery, and book value of third and book value of fourth machinery. Okay, So total book value of all the four machineries is rupees 1,02,800. 1,02,800. Here we can mention that by balance carried on, same date can be entered here. Now we can add the amounts in the debit side. 72,000 plus 40,000, it's 1,12,000. Here 9,200 plus 1,02,800. So total comes rupees 1,12,000. Then 1. So next to that we have transaction on 30/6/2013. Okay, so 1/1 on 1/1/2013 by balance BD 1,02,800. Okay, it's a previous year's closing balance. So previous year's closing balance will be the current year's opening balance. So I entered here. Then on 30/6/2013 machinery sold, okay, for rupees 11,000. Here 30/3/2013, the sales. Okay, so first we need to enter the, we can enter the depreciation. Usually in the textbook they mentioned total depreciation for each and every year. Okay, but we can mention the depreciation for the particular machinery, okay, separately. So by depreciation on the machinery sold, machinery 3 is rupees 285. Then by sales machine 3 rupees 11,000. Then you know that if there is any loss on sale of machinery, that should be entered under the credit side. Okay, so by P&L account rupees 115. so this 115 is loss on sale of machinery 3. Machinery 3. Then next to this transaction we have transaction on 30/6/2013. so this is also related to the sale of machinery. So here 30/6/2013 by depreciation. It's a depreciation on machinery 1. Okay, it's sold on 30/6/2013. so what's the depreciation, total depreciation 1,296. Then we no need to consider the book value, but we need to consider the selling price. Okay, so we should not use sales bank. So bank account It sold for rupees 26,700. Here bank 11,000. Then by see, this is loss on sale of machinery 3, but here we have profit on sale of machinery 1. Okay, that's why here 36 2013 by P&L account in between bracket we can mention it as machinery 1. So profit on sale of machinery 3, machinery 1 is 2076. Okay, then next to this they have purchased machinery on 1/10/2013. Okay, so by bank account they have purchased machinery for rupees 20,000. Okay, next to that we have no transactions, so we need to calculate only depreciation on 31st/12/2013 by depreciation. On remaining machineries. So how to calculate the depreciation on the remaining machineries? We already calculated here. So if you are adding all this depreciation together, you get the total depreciation plus. So 7,048 is the total depreciation on total depreciation of remaining machineries. Okay, so now we have to calculate the book value of total book value of all the machineries. So how to calculate that? So book value at the beginning of the year is 38,880 minus current year's depreciation is 3,888. So here we get depreciation book value of machinery 2. Here we have 26,600 minus current year's depreciation is 2,660. So book value is rupees 23,940. Then here 20,000 minus 500 is equal to 19,500. If you are adding these three values, you will get the total book value at the end of the third year, final year. Okay, this one plus this one plus this one, so 78,432. 78,432 is a balance. buy balance carry down on 31st 12 2013. Now we can calculate the total value of value under the debit side and credit side. So under the debit side we have balance, then profit on sale of first machinery, then purchase of fifth machinery. Here we have depreciation of rupees 285 plus 11,000 plus loss rupees 115 plus 1,296 plus bank 26,700 plus depreciation plus balance. So we get equal balance into the debit side and credit side of machinery account. Then on 1/1/2014 to balance BD 78,432. Sorry students, I wrongly mentioned it as buy. Okay, here we need to use 2. Here also it's a 2 profit and loss account. Here also it's a 2. Okay, so like this you have to prepare this machinery account. So if you are dividing the total machineries like this, then it's very simple to prepare this machinery account. So calculations will be easy. Okay, if you are following this method. First we purchased machineries for rupees 80,000. That 80,000 is divided into two parts. Then again machinery, second time they purchased machinery for rupees 40,000 on 1/7/2012. The total machinery is divided into two parts. One is rupees 12,000 and 28,000. Then we are calculating the total, we are calculating depreciation and book value separately. Right. So thank you students.